first take on the Nifty is up about 30-odd points.
The Nifty is now at the doorsteps of 19,700. And it's not just power.
For the markets near the day's high, we have 65-point uptick on the Nifty.
It has been, a quiet day. And I'm saying that even as the Nifty is up about 70 points or, 100 points. So this is looking good. We started, when we started, we were up 60. That is, it started at 2:30 last hour. And we end with a full 110-point gain, 19,574.
Hello and welcome to Markets Today, the show where we track about 6 hours of the day's trading action in 5 headlines. I'm Reema Tendulkar, and these are the headlines for the day. Markets closed the day with minor gains after a range-bound session. Tech stocks lead the Sensex and Nifty to end near the day's high. The mid-cap outperformance continues. The index posts a record close. Maruti Suzuki reports a mixed bag in Q1. Profits and revenue growth beats estimates, but margins fall short. Marico slips despite an in-line performance on profit booking, but a contraction in volume hurts United Breweries, and a decline in interest income tells on Piramal Enterprises despite its buyback offer. NTPC turns in a weaker than expected revenue performance, but profitability improves on lower input costs. Analysts remain upbeat on the company's green initiatives and upcoming capacity additions, as well as for the sector. RVNL seals an agreement with its bid partners for the Vande Bharat trains contract, ending uncertainty over its execution. The management tells CNBC-TV18 they have an order of 120 train sets worth 120 crore rupees. The stock surges 3%. And here's a lineup of what we have for you in store today. It's a packed show in Market Opinion. Saurabh Mukherjee, Chief Investment Officer of Marcellus Investment Managers. In Big Corporate Voices, Saugata Gupta, MD CEO Marico, Ajay Piramal, Chairman of Piramal Group, and Rajesh Prasad, Director Operations at RVNL. And the first headline, and that's the day's trading action. Markets end with minor gains in a range-bound session. The Sensex and Nifty closed with gains of over 0.5%. Mid-caps continue to outperform. That index posts a record close. Speaking about sectors, metal stocks rose on the back of improved China data. The metal index sees a gain of nearly 2%. Prashant is here with a wrap.
Well, it was a shaky start, but it was a strong close. I mean, actually, the day's low was made right after open at about 9:30 or so. And from 9:30 to 11:30, the market went up and we gained about 70-odd points, 75 points on the day. And then from 11:30 all the way till about 3 p.m., the market plateaued out, did nothing. And then the last 30 minutes proved to be a game changer. The Nifty quickly added another 50, 60 points. And that's the change that you see by close today. The banks index also went up in line with what the Nifty did. Now, gains coming through in names like NTPC. I mean, actually, power has been a strong theme for the last 2 or 3 days. Power Grid, Adani Ports was the other one which did well. There were also names like ONGC, Hindalco, and Tata Steel, which did quite okay. Now, Reliance actually is one big reason why the market went up in the last 30 minutes. It added 20 index points to what the Nifty did. Losses on the index coming through in names like Apollo Hospitals, Britannia, and HDFC Life in trade. Broader market, again, I mean, that's been the scene for bulk of the action. Today was no different. IRFC, Hindustan Copper, Indiabulls Housing, BLS, the visa processing company, Wellspun India, Ujjivan Small Finance Bank. Many of these companies we had on the channel today. HEG, NBCC, Supreme Industries, Power Mesh. You had HPL Power, Sirma, Sula Industries, the winemaker, Vesuvius India, Religare, and so on and so forth. Many of them results reaction and, some of the big moves coming through. Losses also earnings related in more than one case. Piramal was a case in point. Big cut. RBL Bank saw profit booking. Zomato is yet to report, but has done well recently. Saw some pullback. Mazgaon Dock, Syngene, Mankind Pharma, DCB Bank are some of the others which went a little lower today. So it was a strong close after a shaky kind of a start. Global cues have been supporting both US price action and data has been indicating that perhaps there is more to go out there in the US as well. Back to you.
Okay, in market opinion, Saurabh Mukherjee of Marcellus Investment Managers is seeing the rise of index funds in India to be the next big thing coming in 10 years. He expects the specialty business to do well, but lending space to consolidate going ahead.
Our reading is the lending space is consolidating, whether it be private sector banks
Okay, let's get to the second headline then. Maruti Suzuki has reported a mixed set of Q1 numbers. Profits and revenue growth is on target, but margins have come in below estimates. Ahead of the numbers today, the stock rallied close to about 1.5%. Okay, let's get to the third headline then. Marico tumbled 2% despite an inline set of Q1 results. The company also recently bought a majority stake in D2C brand Plix. Saugata Gupta, MD and CEO at Marico, says they expect to improve the trajectory in volume growth in the near term. Adds they will also increase their ad spends.
We've looked at some of the capabilities that are required to do digital business, including addressable market, the way they do digital marketing, and the founders. I think all of them sound exciting. And I believe that they will on the growth path. At the same time, what is also encouraging is they are doing it at a very low cash burn. All we can say is that definitely we believe that I think at the 3% which we did, we could have perhaps a little more, but for the one-offs. And we expect this one to gradually improve as we move to quarter 2 to quarter 4. This year also we started out with growing spend, but yes, the A&P percentage might move up a little bit, and we will continue to invest to get back growth. This is a great opportunity, I think, to get back growth and protect market share. As you know that in the last quarter also in 85% of the portfolio, we gained a protected market share and penetration. So therefore that journey will continue, and therefore going forward, some of the gains of gross margin will be plowed towards ad spend.
Okay, let's get then to talking about UPL. UPL was under pressure on the back of a big miss in net profits and revenues. The company reported a net profit of just over 160 crore rupees, but this compares to expectation of 260 crore. But there was a bit of an improvement compared to estimates on margins, with EBITDA margins coming in at 17%. But the stock tumbled after the company lowered the full-year guidance. Sona joins in with more details. Sona.
Well, UPL is a definite miss, and it has come in especially on the profits because of a lot of one-offs. But the big headline definitely has been the guidance cut from the company. To take you through the numbers first up and comparing it with the poll, revenues have come in at 8,900 crore rupees, which compares with the poll of 9,800 crore rupees. EBITDA at 1,950 crore rupees. Margins at 17.8%, which is higher than the poll of 15.9%. But net profit is a decline versus the estimates. That's because of a one-off. They have booked a loss, or I would say a cost in their subsidiaries, and that is something that has impacted the profits this time around. The big headline now, they've cut FY24 revenue growth guidance to 1 to 5% versus 4 to 8%, and EBITDA growth guidance to 3 to 7% versus 6 to 10%. They say demand at the grower level continues to be strong and channel inventory is gradually normalizing. However, channel demand that will continue to remain weak in quarter 2, and recovery is expected only in the second half of FY24. They are undertaking cost reduction initiatives of around $100 million over the next 24 months, and that is something they think will lead to improvement in margins as well.
Okay, thank you very much for that. Getting back to Maruti Suzuki, which reported a mixed set of Q1 numbers. Margins have come in slightly lower than estimates. Sonia joins in with a report card. Sonia.
Well, thanks a lot for that, Seema. So, if you look at the numbers, they were mixed because the earnings on the top line was strong. It was a revenue growth of 22%. But it's on the margin front where you saw the big disappointment. Both on a year-on-year basis, the margins were expected to come in at 10% plus, but it came in at 9.2%. While on a sequential basis as well, it's a fall that we've seen in the margins of over 100 basis points. That's because of higher employee expenses that have kicked in this time around as well. So that hit the margins. But if you look at it, the other data point that has come through is that the board has approved a termination of the contract manufacturing agreement with Suzuki Motors Gujarat. They will be acquiring Suzuki Motors' 100% stake in Suzuki Motors Gujarat. Now, although this has come as a bit of a surprise, the analysts say that this will not impact the bottom line too much. In fact, if anything, the blended margins will improve post this, So in a sense, I don't expect so much of a reaction on this, but on the core numbers, yes, the EBITDA margins are below what the street is estimating, and that could perhaps lead to a downside in the stock in terms of a reaction tomorrow. Also considering that there's no valuation headroom because, the stock is currently trading at 26, 27 times forward in line with its historic multiples. Back to you.
Okay, thank you very much for that. Get into a break. On the other side, we'll be back in a jiffy with the other headlines. Welcome back. You're still watching Markets Today, and let's go over through the rest of the headlines that we're tracking for you. This is the fourth one. NTPC gained 3% after it reported a 9.4% jump in net profits. Margins came in higher on a year-on-year basis, but there was a bit of a miss on the top line. Revenues declined by 2.3% due to unseasonal rains. Vivek is here with the details. Vivek.
Well, absolutely right. When you're talking about NTPC, remember, it's a steady regulated business model that the company enjoys, and which is why, earning steadiness is always there as far as, quarterly results are concerned. Now, talking about the numbers themselves, slightly subdued compared to the poll and compared to what analysts were anticipating. Revenues were muted given the fact that unseasonal rains actually impacted the demand, leading to lower generation, and that impacted the top line. But the core EBITDA or the operational EBITDA that we are looking at, was quite strong, aided both by lower fuel costs and also lower expenses. So operational efficiency is kicking in, leading to a significant expansion as far as margins were concerned. When you're talking about the profitability was higher by almost 9%, a slight miss as our estimates. But despite that, good operational quarter as far as NTPC was concerned. Now, talking about what analysts had to say, Citi believes that first quarter was a steady quarter operationally, and the company also saw multiple developments as far as green energy initiatives were concerned. And what they say is that along with the thermal capacity addition that the company has planned for the next couple of years, that should continue to aid the stock performance. Along with that, NTPC, there is significant valuation comfort, and they believe at 1.2 times price to book earnings FY25 estimate is quite attractive given the fact that the company manages to generate an ROE of over 12%. All of these factors has kept NTPC quite buoyant in today's trading session.
Okay, thank you for that. Let's move on and talk about Gail. Gail gained close to about 3% despite reporting a mixed Q1. Revenues came in marginally higher than street estimates, but margins and profits missed the mark. Sonal is back with us with the key numbers. Sonal.
Well, for Gail, it was a mild miss versus the poll, but there's nothing really to worry about because sequentially the numbers look really good. On a revenue basis, it is down 2%, but EBITDA has come in higher at around 2,400 crore rupees, and margins have substantially expanded to 7.5% versus 0.9%. The profits for the company have come in at 1,400 crore rupees, which compares with the poll of 1,655 crore rupees. But if we look at the segments, what would have actually led to this mild miss? Well, natural gas transmission is absolutely in line with estimates. It has seen an increase on a quarter-on-quarter basis at 1,029 crore rupees. LPG transmission at 80 crore rupees is flat on a quarter-on-quarter basis and compares with a poll of 100 crores. Marketing segment has been in line with estimates at 1,014 crore rupees. But the petchem business, that has reported a loss of around 300 crore rupees versus an estimate of 100 crore rupee profit. So petchem continues to be under pressure, and that is something that we need to track as well. LPG business has seen a bit of 202 crore rupees versus an estimate of 300 crore rupees. But yes, it is a sequential increase, and management commentary from here on will be important to note in terms of Gazprom supplies and outlook going forward in terms of spreads as well. So Gail, a mild miss, but really nothing to worry about on the numbers.
Okay, thank you for explaining that and putting it in context. Let's talk about Piramal Enterprises that came under pressure after a weak Q1, and this is despite the buyback that the company had announced. The chairman of the group, Ajay Piramal, says the group won't need any more equity for the next couple of years as the debt-to-equity ratio is at a comfortable level. Listen in.
Even now, after this buyback, our debt equity only goes to 1.3 times.
Okay.
Therefore, even if I take a growth of 20-25% for the next 4 or 5 years, I don't think we will need any more equity.
Moving on then to other earnings, United Breweries slipped 2% after reporting weak profits and sales numbers in the current quarter. The miss was actually on the volume front. Volumes for the company have been impacted due to capacity constraints. Surbhi joins in to explain the details. Surbhi.
To start with, what went wrong was the volume. Now, they saw a volume decline of 12%, which analysts did not expect. Analysts expected anywhere between a single-digit volume growth, So that's where primarily the results went wrong, which led to a revenue decline of 7% on a year-on-year basis. Gross profit margins was also down 380 basis points, but that was largely expected due to the inflationary pressure on the input cost. The management does say that the volatility in the input cost costs will persist in the near future as well. The EBITDA was down 16%, margins were down 110 basis points, came in at 9.8%. Now, the volumes were down due to route to market changes in Telangana and Haryana, and the capacity constraints in the peak season in the region of Telangana, which also led to a volume decline. Additionally, Heineken, the global parent, also declared their results for the first half, and they have lowered their profit forecast for the rest of the year. They said the beer volumes for the first half were down nearly 6%, and the demand in the APAC region was soft. So, demand mutedness and also volume decline due to supply chain challenges are some of the key concerns for United Breweries.
Thank you for that. Let's get to the fifth headline then. RVNL rallied 2.5% after the company sealed an agreement with its Russian partner for Vande Bharat train contract. The management told CNBC-TV18 that the agreement is for 120 train sets worth 120 crore rupees. Vivek is back with the key highlights. Vivek.
Well, in an important clarification, RVNL, along with its Russian partner who had earlier emerged as the lowest bidder or L1 for the 200 train sets of Vande Bharat. Earlier there were reports that had indicated that RVNL and its Russian partner had a falling out, given the fact that RVNL, which initially had a 25% share in the joint venture with its Russian partner, had asked for a higher share, and on the back of which there were concerns that they would be pulling out of the bid, as well as concerns had emerged whether this particular Vande Bharat order win could go through. However, RVNL in an exchange notification has clearly mentioned that they've gone ahead and signed a partnership between the company and its foreign partners. RVNL will now have 25% of the total shareholding as far as this particular Vande Bharat bid is concerned. Its Russian partner Metro Wagon Marsh will have around 70%, and another entity known as Locomotive Electronic Systems will have another 5%. Remember, RVNL has also been in focus given the fact that the company has seen a very strong response to the OFS that was initiated by the government in order to pare its holding and bring it below the SEBI-prescribed minimum public shareholding norm of below 75%.
This is basically a modernization of coaches. Today I was going through a newspaper and where I found that Ministry of Railway is trying to basically renew these 800 old coaches. These Vande Bharat coaches are having better safety parameters, more comfortable, they are faster, and aerodynamically it is designed. It has got faster acceleration, faster deceleration. So we have got a contract of 120 train sets and at the rate of 120 crores, and these train sets will be manufactured at Latur. This has got the comprehensive maintenance component, and the average cost is around 4% every year for this 120 train sets. Order book has now gone up. We have got around 65,000 crores. 35,000 crores is through the nomination, and the bidding part has now gone up to 30,000 crores. And if you realize that we have started participating in less than 2 years, we have participated in 169 bids and total costing around 95,000 crores, and we have got 30,000 crores. Few bids are yet to be finalized, so the success rate is more than 25%, and we want to have a target to have the order book of 75,000 crores to 1 lakh crores. So we are coming nearer to 75,000 crores.
Okay, and one more stock for you, that's TCS. That rally closed about 2%. The news is that the company's new CEO, K. Krithivasan, who took charge on the 1st of June, has announced a new restructuring, a new operating structure for the company, for the entire group. And this is the first big change that we've seen with Krithivasan as the CEO. Now, earlier, TCS had grouped the company into 4 units based on the account size. There was a head for all the projects, which was sub $20 million in size. There was someone who looked at all the $20 to $100 million clients. There was someone who looked at more than $100 million clients, and so on. But this perhaps created a little bit of uncertainty because, accounts would often migrate and jump from one bucket to another. Now, what K. Krithivasan has done is that he's decided to break up the structure into units based on the vertical. So everyone will have their own domain contextual knowledge. There is a head for BFSI. BFSI, in fact, because it's the largest vertical for TCS, has two heads. One will look after BFSI North America, and the other one will look at BFSI UK, Europe, and Australia. But the other senior leadership announcements that have been made are for other verticals like manufacturing, for retail, for life sciences, communication. So this, according to analysts, is a simpler structure, and which is why the stock has reacted positively to the step taken by the new CEO of TCS. Well, that wraps up all of today's market action. Thank you very much for watching. Stay with CNBC TV 18 for more news and updates.